Good afternoon, everyone, and welcome to the SCORE webinar, What Will Your CPA Be Looking For at Year End? Presented by Joy Baker, the owner of Baker Bookkeeps, and she's going to give you a lot of useful information. So without further ado, Joy, it's yours.
Thank you so much, Michelle, and thanks to SCORE for inviting us back again to host this particular subject, especially at year end. I know it's maybe not the most exciting thing to do on your lunch hour, so thank you for joining. I've also once before, and hopefully again in the future, led one of the webinars on QuickBooks quirks. My firm, we love using QuickBooks. And there are a lot of business owners using it and doing a fantastic job. There's just lots of quirks to it. So hopefully get to teach on that one again in the future. But for today, so like I said, we work almost exclusively with QuickBooks Online, a few others, but I'm trying to, as much as possible today, this subject be pretty general and relate to everybody. I do have a few things in here that are specific to QuickBooks Online. I know it's a very popular platform to use anyway, so hopefully still very relevant to everybody here. But just trying to focus on this general question. I've got a general list of some things that your CPA might be looking for. I will say it's not a super exhaustive list, because it could be anything, especially depending on what type of industry you're in or what type of a business, whether it's a corporation or LLC. So I'll touch on that a little bit. But mostly the time is going to be focused on the reporting, specifically the profit and loss statement and the balance sheet, because that's something that's going to be needed by for every business. Every CPA is going to want to see those two things. So focusing on those and focusing on the how do you know if the reports are accurate? And that is $1 million question. It is not an easy answer. It's very multifaceted, but we sort of scratch the surface of what things to be looking for to get an idea if they are accurate. And I will have a Q&A time at the end, but definitely feel free to throw in any questions you have, and Michelle will be able to see those and shout those out to me if needed. But we definitely have some time at the end for Q&A. So without further ado, so again, not an exhaustive list, but these are a few things: your profit and loss statement, your balance sheet. I will touch on each of those individually and go into more detail on those. If you've got subcontractors, you've got to send the 1099s out to them by, I believe it's usually January 31st. So those need to be sent to your contractors. For some CPAs, they do want to have copies of those, have them sent to them as well. Oh, you know what? I forgot to edit that. That should say 1099s and W-2s. I'm so sorry. But some CPAs will need the actual copies of the 1099s, and some of them don't. There's one client that we work with where we send out 1099s to their contractors, and we just give the update to the CPA. All of the here's the list of vendors that have received them, but they don't actually need copies. So kind of depends. Sometimes it's supposed to say W-2s. Sometimes they will need to see W-2s, especially for the owners. That's probably most relevant. They probably will need to see those, but maybe not necessarily for a full team of your W-2 employees. One other thing. A couple other things is potentially your accounts receivable, either list or balance. This accounts receivable is just going to be, what do you have in outstanding invoices that haven't been paid? And sometimes they'll say, send me that number, send me that balance. That is, as long as everything's included in your reporting, that is included in your balance sheet. And so looking at your profit and loss statement for your revenue and your accounts receivable balance to show what's represented as revenue that's supposed to come in but hasn't fully cleared the bank yet. So they might ask for that. Same for your accounts payable, any bills that you have outstanding that are represented maybe as an expense in your profit and loss statement, but they haven't actually cleared the bank. They haven't actually been paid. Those are showing as a balance on your balance sheet. Some other things, if you've got inventory, They probably need some details on that. I will say the subject comes up sometimes with business owners who are dealing with inventory. They're either looking into using an inventory software. I will say QuickBooks is able to handle inventory tracking. I don't recommend using it because it's not a great one, and it's really easy to you talk about quirks. It's easy to mess up all kinds of balances with using that. So just my extra 2 cents worth. I don't recommend using it for that. But that may be something if you have inventory, if you've got that type of industry, they're going to need to see some details on there. So another one that's not quite listed here. But like I said, the main things to focus on or the profit and loss state for us to focus on today are the profit and loss statement and the balance sheet. So let me dig into that just a little bit, the profit and loss statement. So in general, you are looking at a specific date range. If you're going to send it to your CPA at the end of the year, it's going to be January 1st to December 31st, typically. If you are on a different fiscal year cycle, nonprofits are most commonly on a July 1st to June 30th calendar, so might be that. But either way, when you're going into your accounting software and pulling reports, and you're looking at the profit and loss statement, you will be looking at a specific date range. And there may be a default to go to just look at last month. May need to edit those, but it is for a specific date range. In general, the profit and loss statement is going to be showing your income or revenue and your expenses, those two things. You will be able to, at least in most softwares, be able to look at accrual basis versus cash basis. I don't want to go too deep into that, and mostly because probably most people are at least familiar with those, with all of that. But accrual is, and I'll use invoices as an example. If you are recording invoices in QuickBooks or any software, it is showing as revenue on your profit and loss statement. But if it hasn't actually been paid yet, it's going to show up on the balance sheet as outstanding. But that's accrual based. It's going to show that as revenue, even though it's going to show as revenue in December, even though it's not technically paid till January. So that's especially where it comes in handy of your CPA knowing what your balance is, what's outstanding there. If it's cash basis, it's not going to record it until it's paid. So, yeah, not going too deep into that, but so in general, the profit and loss statement is not going to show what liabilities you have, anything outstanding there, such as loans and credit card balances. It also does not include any assets, like things that you own, like property, or if you are purchasing large, like a big printer or a computer or something like that. There are general rules for at what point do you consider it an asset versus an expense. Not going too deep into that right now, but your assets, those larger things you own, like especially larger equipment or property, things like that, it's not going to be showing, that balance is not going to be showing on the profit and loss statement. Here is not a great example. I've used this before. It's like, I got to get a better example of the profit and loss statement. But then I was like, sometimes it's good to show some not great examples and pinpoint what maybe I would recommend doing a little bit differently. So in general, this is the structure of the profit and loss statement. You've got your revenue or income up at the top. In this particular example, it has both sales and services. I would say that's not necessarily wrong, but it's probably not super common. You usually either a service or a sales, but you might be a service-based industry and speaking, consulting, that kind of thing. But you do have some products that can be books or things like that can be sold. So it certainly can be listed like that. But it's actually it's really up to you on how those categories are named. And you can have all kinds of the sky's the limit on how many subcategories you have of all of these. There's no right or wrong. It's really setting it up in a way that makes sense for you, so you're understanding what you're looking at, and so it's just it yeah it's set up in a way that's the most helpful for you when looking at it. The next section down, so that's your income or revenue up at the top, and then everything else is expenses, and so it's revenue minus expenses, you get the bottom line. But more specifically, the expenses section is typically divided out into two. So your cost of goods sold versus overhead. So your overhead is going to be things like software subscriptions, office equipment, marketing, things like that, bank charges. Again, this is not necessarily a great example here, but this is what's a common default, and so I'd love to touch on it. Job materials. Sometimes job materials do need to be down there, but you'll also see up a little bit higher in the cost of goods sold section, supplies and materials. There are a lot of sometimes just default accounts that are created for job materials. So really dig into what's the right thing for your industry, but also what makes sense for you when organizing it. So the difference here is with the cost of goods sold section. That is intended to be, these are the products that you are buying in order to either resell them or to be able to go do the job. Like if you're a landscaping company, you've got the plants, the soil, all of those things that are being purchased for this job. And even if it's, purchasing a whole bunch of them in bulk and then spacing them out over multiple different jobs, still should be treated the same way. It's a cost of goods sold or cost of sales, however you have that set up. Another thing, and so the job materials in that in this example, I just personally, I'm big on just like, okay, let's dig into that. Let's see which section should it be in, and mostly so there's not this basically doubling it and having, well, this is the jobs, this is the supplies and materials, this is the job materials. It's not super clear by that. It's also not clear to your CPA. And even though you've got this number listed in there, you got the same bottom line, no matter which section it's in. It's not wrong, but pinpointing that, just digging into it, just makes all the reporting much more clear, so that you have a better understanding of what it is you're money in, money out, for your gross profit there, and then how do the overhead expenses factor into that. So in general, the revenue minus cost of goods sold, that gets you your gross profit, and then all of your overhead expenses. And so that's your net income at the bottom. All right, the balance sheet. So this is showing a representation of the accounting equation that you probably have heard, have seen before. This is assets equals liability plus equity. You also could look at it as assets minus liabilities equals equity. I will say the profit and loss statement is, I feel like, a little bit more straightforward, and it's money in, it's basically money in, revenue minus expenses, most money out. The balance sheet is a little bit more complicated. It's I should say more complex. But in general, your profit and loss statement, you're looking at a certain date range. With the balance sheet, you are looking at a snapshot of one given date. One thing, and this is specific to QuickBooks, but I think it's true in some other software as well. If you pull the report for your balance sheet, it'll still have a date range in there, which is honestly, when I first started looking, I was like, I feel like that's confusing. So I'd like to touch on that briefly. So you can have the date range of this year or last year, or whatever it is. But it's still actually saying, well, it's the last day that's listed. This is the snapshot as of December 31st. The reason it has that date range, again, at least specific to QuickBooks Online, is that you're still seeing that same number, same balance, but when you click on that number, you can see all of the transactions that happened that were affecting that balance, all of those specific transactions that happened during that date range. So I feel like that's a computer because it's supposed to be one given day. This is the numbers as of one given date, but it does ask for a date range. So hopefully that's helpful. So here's an example of a balance sheet. Again, we've got the assets, got the liabilities, got the equity. So some examples of assets. Your outstanding invoices, which I've touched on before. So let's see. There we go. Your basically what's your outstanding AR. Also your bank balances, any cash. In general, I'm not a big fan of having anything listed as cash. You aren't seeing, digitally money move in and out. So if you do have a cash account, you need to then go count, update it, all of that. So I'm not a big fan of having that on there, but sometimes it is necessary, especially if it's a retail space. But definitely any of your bank accounts, all of those are listed in your assets section. Also inventory, again, don't recommend using inventory in QuickBooks, but your CPA is able to create a journal entry if needed with the information you have from another system. They can add that in so that it is represented let's see, here, I'm looking at the comment there. Here we go. Oh, so I just saw the question pop up, and I believe as long as I'm understanding your question there, if you've got an invoice represented on a profit and loss statement for December, but it doesn't get paid until January, it's going to show it here as your accounts receivable. Undeposited funds is a little bit trickier. At that one showing here. Undeposited funds are you're showing a payment that has happened, and especially if an invoice was December 1st and it was technically paid on December 31st, it's going to show up in undeposited funds until you match it. I'll get into that a little bit later on matching, but if it actually doesn't clear the bank until January, that's why it would be showing as undeposited funds. But I will touch on that a little bit more specifically, especially the adding versus matching, because that's a quirk that needs to be discussed. So anyway, those are general things in your assets, in property owned, equipment owned, things like that. Liabilities, this is going to show any outstanding bills that you have recorded. This is going to show your credit card balances. And it's also going to show, just like, your bank balances are showing up there at the top in assets, your credit card balances are showing in your liabilities. The other thing is loan balances. I will touch a little bit more on that because those can be a little bit trickier. But if you've got a large loan that has come through, you just got $100,000 invested into your company, a bank loan, especially is a good example. That's not revenue. It's not going to show up on your profit and loss statement. It is now showing as a liability because you do have that owed back. It went into the bank account, but it's also represented as a liability there. I will touch on loan payments on the next slide. But those are some examples of what would be in your liability section. For your equity section, so let me touch on owner's pay, because that's a big question that comes up a lot. In general, if you are a sole proprietor or an LLC, your payments to yourself as the owner, your owner's draw, are going to show up on the balance sheet in the equity section. This is what you've paid yourself. If you are a corporation, usually you're on payroll, and that will be represented on the profit and loss statement. Again, I'll touch on that a little bit later, but that's something that would be showing there. You've got retained earnings. This is, well, let me actually touch on that. So net income, this is the bottom line of your profit and loss statement for this year. It's pulling that information. It should be the exact same number. That's what's showing as your net income. Your retained earnings is that number for all of the combined previous years that you have recorded in here. If you do have a situation where you started using your accounting software when you were a year or two into your business, it's not going to include anything from previous years if you haven't had it recorded in there. Just one thing to keep in mind when looking at your retained earnings for all the past years. It's just gonna be what's already recorded. These are a few things that are not just super straightforward on which report they should be represented on. So I touched on this briefly. So on loan deposits, again, it's not revenue. It is not money that came in to your business because of services or products sold. It is money going into your bank account. Great. But it is going in, it's going into the bank balance, but it's showing up as a liability there. When you have loan payments, when you're sending, let's just say $1,000, just to make the math easy. Let's say that 900 of that is paying back the principal, but 100 of that is interest, although usually it's the other way around. But just to make nice, easy numbers, round numbers there. Of the $1,000 that's being paid, that's not all going into an expense or just the liability account. That actually needs to be split out. And for most accounting softwares, you're able to see any transaction and split it out into multiple categories. You could even have, even if it was all expenses, but half of it was office supplies, half of it was marketing, or that's not a great example, but if you need to split it out, you can. In this particular situation, you definitely need to split it out. You can look at your the statements for your loan, your loan statements, and you can see what of that money went to, of that $1,000 went to interest versus the principal. So the interest, we're just going to use 100 as an example. That $100 needs to be recorded as interest paid or something like that. The exact naming can be anything, but that interest paid is an expense. It is showing up on your profit and loss statement as, and it can be written off, included in your tax filings. That's showing up on your profit and loss statement. But the money that went to paying down the principal in this example, $900, that's actually going to be represented on your balance sheet. It's going to have that, it's $100,000 into this this liability account that's represented on the balance sheet. 900 was just reduced from that. And then each month, another, it usually changes, but another 900 goes down. So it's showing that balance continually going down, but it's not going down by 1,000. It's only going down by 900 in this example. And so the interest is going into your profit and loss statement. I'm happy to give more detail on that later if there are questions, but that's just a general rule for loans. This one isn't coming up quite as much these days, but definitely a few years ago. Any PPP loans, again, it's not income, it's not revenue, but it is money coming into the business. Definitely check with your CPA to see what their preference is on how to best record that. But what I was hearing from I think all of the CPAs that I was talking to is that should be recorded as an equity if it is a forgiven PPP loan, because it's not a liability if you don't have to pay it back. So most were recommending to record it as an equity account if it's forgiven. Hopefully that's helpful. Okay, this is more specific to QuickBooks Online, but I know a lot of people use it. So the biggest question is, if you go into your QuickBooks account, you can go to the reports tab and pull a profit and loss statement. How in the world do you know if it's actually accurate? So, and it's a very complex answer to that, I feel like, or it's multifaceted, as I said. So there are a few different sections of QuickBooks that are important to talk through on what the distinction is between them. And that's the banking center, or you might see bank transactions, a tab that says bank transactions that used to be called the banking center. Someday I will be able to say that and change that over in my head. But there's the banking center or bank transactions tab versus the bank register. So the banking center, bank transactions tab looks something like this. It actually is, it's updated many times, but it looks something like this. This is where you can go in and connect your bank accounts and your credit card accounts. Some people think you shouldn't be doing your credit card accounts, but you should. This is exactly where you want all of those. Anything that's a business bank account, a business credit card, utilize this, because you could go in and manually record every single transaction, but it takes a lot of time. It's easy to make mistakes, to type in the wrong number or the wrong date or something like that. This makes it far more efficient, streamlines a lot of it, and helps reduce a lot of common just human errors. So this is where you connect all of those. In general, and there's an asterisk next to this, if there's a transaction showing here in the banking center, it is not actually showing up on your reports. If there's bunches, especially several different that says there's 25 transactions for this checking account, they are not actually showing up on a report yet, unless you have manually recorded them. But for the purposes of this, it's not actually there yet. So if there's expenses there, they're not going to show up on your reports, and therefore you're not going to have accurate reports to send. You're not going to be able to write off that expense. So the biggest thing is adding them from here. The bank register, I can't, sorry. Yeah. Okay. I want to make sure, I didn't know if I had a picture of that. So the bank register is actually, you've got one register per bank account or credit card account. And you'll be able to see everything that's been recorded. What's showing in that bank register is showing up on a report, whether or not you manually recorded it or you added it from the banking center. So keep that in mind. But if it's just in the banking center, it's not going to be showing up on a report. So need to make sure that everything is added from there so that it's showing up on your register. Again, I go into, I could talk all day about this particular subject, but just scratching the surface here. One tidbit you'll see, hover over it. Oh, my mouse isn't working. You'll see over here on the right of the screen, add on the side for each transaction. You can go in, you can tell it which category to go into. I do not recommend using uncategorized expenses, uncategorized anything. But you can tell it what category to go into, what vendor, what customer, and you can add it from there. You add it from there, it'll go straight into your bank register. Once it goes into there, it is represented on your reports. The next biggest thing, again, I go into a lot more detail on that on my QuickBooks webinar, so feel free to join in on that. The biggest thing, the next thing that's honestly it's the be all end all, is the reconciling. This is where you can go in and you can put in your bank balance. Hey, this is what's showing up on my bank statement as the ending balance. We put that number in and we check to see if there's any discrepancies there, if there's any change, if there's any difference showing. So if there is, then there might be something that hasn't been added. There might be something that's duplicated, but this is where we check for that. I will say, again, I could go on all day reconciliations, but this is how it should look when you are finishing a bank reconciliation. You can see that nice, pretty green check mark up there with $0 difference. Great. However, some people stop at that point, and that's and this is where the problems are. You've got to make sure that there's no transactions listed there that aren't actually reconciled. So you can see over on the side, all of these have a check mark next to them. These are showing each individual transaction that is reconciled. If there's anything showing here that's not highlighted, that means that one hasn't been reconciled. Now, if it's at the very end of the month, maybe it just is actually showing up on the next statement, which is fine. But go through there. Don't skip that step. Make sure there's not anything that's listed that's not reconciled, because there might be a duplicate in there. And I'll use one of the examples here. The 5621. If that's listed in there twice and one of them has a check mark next to them and one of them doesn't, then it looks like that's just a complete duplicate. But if it's showing up here, it's showing up on a report. So that $56 is duplicated. So this is where you go to check to make sure that you don't have anything duplicated, and also, again, make sure you don't have anything missing. So again, I could go all day, go on all day about reconciliations, but that's just scratching the surface of one very, very, very important aspect of keeping the books and being able to ensure that your reports are accurate, that nothing's missing and nothing's duplicated. Um, I'm going to pause there and see if anybody has any questions. Again, scratching the surface on reconciliations, but some people aren't aware of it at all. And it's really, really important. And some people are maybe keeping up with the transactions really well and doing all the due diligence and everything looks great. And your CPA may ask, is everything reconciled? Or they'll go in and look, say nothing has been reconciled. That's the be all end all to make sure that everything's accurate.
If you have a question, go ahead and unmute yourself. Wow, can't believe no one has a question.
What happened last time? I don't know if that's a good thing or a bad thing.
You did a great job, Joy.
And like I said, I'm happy. I'm happy to go into detail all day long about some more QuickBooks quirks. I just want to make sure to focus on having this be pretty general. Some people use have all the details on spreadsheets, and if that works for you and that works for your CPA, great. I will say that there are many options out there for accounting software that can be used that just streamline that process. Yes, there's a subscription, there's a cost there. But for the most part, it's going to save you a lot of time. And again, just make it where it removes a lot of the human error possibilities. Um, and yeah, makes a big difference there. Does anybody have any QuickBooks specific questions? What are the specific challenges with inventory? Okay, so this is actually kind of similar to cash, but it's more complex. The inventory has to be, I should say, it's more manual because you've got to see, what's sitting in your warehouse and then go update things. So with just money moving in and out of a bank account, you can see the exact balance. It's easy to do, it's much more digital. And with the inventory, you've got to constantly be checking for that for one. But at least when I've delved into using QuickBooks inventory some, you do need to go in and create all these products. You got to tell it where to go. You got to have the quantity right, and it starts affecting with anything in accounting. You're doing a debit and a credit, and so if you can't just say, oh well, this is the wrong balance. It's actually should be 5 instead of 10. Uh, just changing that actually is more complex than it should be, because you've got to move it from one place to another. It's not terrible. You can do that a little bit, but you're affecting two things at once. And mostly the inventory capabilities in QuickBooks are just clunky. There are just a lot more out there that are better. I have not personally used many of them, but I have heard from one of my clients that they just recently switched to using Sortly. Like, I haven't used it personally, but she raves about it. Absolutely loves it. It's just, yeah, QuickBooks is just a little bit archaic, I guess, on all of that. And then because it is in QuickBooks, it's affecting your balance sheet, whether it's right or wrong. So it can just and the biggest thing with anything with your books, and not just inventory related, but anything from past years, if you've filed your taxes for those years, you should never edit anything from past years. So there's sometimes when we're working with clients who have maybe neglected their books for a little bit, or there's just incorrect stuff from previous years, but they filed taxes on those and they use those reports. Technically, you shouldn't be affecting anything, and you shouldn't be editing anything. But the balance sheet is set in stone on all the past stuff, so it's going to be contributing to your current balances on the on the balance sheet. With the profit and loss statement, you're just pulling the details for this past year. If there's mistakes from the previous year, it doesn't technically affect the profit and loss statement from this year, but it does affect the balance sheet. So basically anything that affects the balance sheet, I'm a little weary of. Um, I will also give my 2 cents on QuickBooks payroll. Um, I don't, there, it's kind of the same thing. There are better softwares out there that handle that. One particular quirk that I've seen many times when people use QuickBooks QuickBooks payroll is sometimes there will be an issue with how it's recorded, and it will actually create a bank account and have it where it's recorded as if it came out of this bank account that doesn't exist. I don't know why it just does that, and it's not showing it coming out of your actual operating bank account. So it's recorded in the wrong thing, and so it's probably duplicated, and you actually can't just go edit that particular transaction. So it's very weird. Somebody said, yeah, I agree with the payroll. Fan of ADP. Yeah, ADP is great. I'm also a big fan of Gusto. That's what most of our clients use. But yeah, both great platforms. But there are other platforms that do all that better. QuickBooks is fantastic for showing revenue in and expenses out and showing you that bottom line. And there's a lot of capabilities on being able to organize the chart of accounts really well, so that you can set it up and make it look the way you want to. And there are some right and wrongs in accounting, of course, but especially as far as naming conventions on all these expense and income accounts, it's um, it's really up to you, and so you can organize it however you want and have as many subcategories as you want, or not.
Great. Treva Carnes in the Q&A says, I'm in the process of learning, so I'm just taking it all in. Thank you
Excellent.
so much. Very helpful.
Yeah. And I think I just saw another one.
Are there cheaper, easier options than QuickBooks?
QuickBooks has definitely raised its prices. Not a big fan. I mean, they basically doubled in the last few years. Um, to be honest, I don't have an exhaustive mental list of all of the pricing for other ones. Um, it's just the one that I know about the most. The other two that we do work with some are Zero and FreshBooks. FreshBooks is better on its invoicing, a little bit better than QuickBooks, and it can do all of that, but it also doesn't have as many capabilities as QuickBooks. So sorry, I don't have a great answer to that. Oh, it's okay. How many software systems in addition to QuickBooks does small business needs? So it's really just based on what your needs are. I mean, again, payroll, I would recommend having that as a separate software. Inventory, but QuickBooks is going to be, or an accounting software is going to be what's needed for showing that revenue minus expenses. It's really, really good at that. I don't know that there really needs to be any more than that. I mean, if there's a specific example, go for it. I will say QuickBooks does have a bill pay option now. They didn't always have that. They used to have Melio as a third party that integrated, and that's Melio still exists, and it still integrates very well with QuickBooks. But now QuickBooks has its own bill pay, um, and also AR. Like, you can receive payments from QuickBooks invoices. There are processing fees. So yeah, to sort of weigh the options there. I do think QuickBooks does pretty well with the invoices, but again, there are quirks to know about, especially since you list a service or a product that's showing up as a line item on the invoice. It's then coded to probably a different name for an income category. So just knowing about those quirks is having, yeah. Um, yeah, I could talk on QuickBooks all day. I am actually working on a course on QuickBooks. I think it's needed. So, any banks you have worked with integrate better than other financial book. Um, The banks, there are some banks, and US Bank is the worst one about it does, you can connect it in the banking center, bank transactions tab, but it disconnects all the time, every day. So you have to go reconnected. That's fine. It's fine if it disconnects and you reconnect it as long as it hasn't been months. But I think it integrates better. There are the ones that I really like are Novo and Relay. I'm actually I was even gonna have this up here in case anybody wanted, but I am a Profit First professional. If you haven't heard of Profit First, it's a book and it's a methodology, but it's a cash flow management system. But it's the purpose of it is to have multiple bank accounts. And so one of the banks that partners with Profit First is Relay Bank. It's a great one that I definitely recommend. It's one where there's no minimum balance requirement and there's no fee for any of the accounts. Again, since Profit First is the whole point of it is to have at least 5 bank accounts. Um, it partners well with that. So those are two that I use. I mean, that I will say the smaller and more regionally based the bank is, the more difficult it can be in trying to connect with QuickBooks. Sometimes they will, but they don't. If there's a lot of security feature, you're just having to constantly reconnect. Um, there are some banks that, and I know Novo does this, that has like bookkeeping included, or you can use it for bookkeeping. I have not used those. I don't have a lot of detail on that. Um, yeah, but I do have just general information about our firm. And actually, I know Donna's in the call with my she's one of my team members. Donna and Lauren are my team members. We're bookkeeping. We're doing the bookkeeping. We're not doing the year-end taxes. We're getting your reports ready for your CPA at the end of the year and making sure they are accurate and everything's reconciled and everything is exactly the way it needs to be. We also have several clients that we work with who are doing all that, recording all those transactions themselves. And it's the perfect thing for them. Maybe it doesn't make sense budget wise or even just like logistic wise to outsource that fully. We can come in on a quarterly basis and reconcile everything. That's the biggest thing. That's to make sure everything's right. And review. We usually have a phone call once a quarter, talk through any questions that you have. We look through. Let me ask about this particular transaction because it's kind of large and I want to make sure it's in the right spot, especially if it's an asset versus an expense, things like that. We pick that apart a little bit to make sure that everything's in the right spot, and so that you're getting the most uh, out of your tax filings. You want to be able to write off all of your expenses. You also don't want to like doubly count anything or miss anything and miss out on tax savings or create red flags. But yeah, the other thing that we help our clients with, with implementing Profit First. So Profit First is simple in its essence, but it's very, very, very powerful in how to utilize money coming in, cash basis, how to help budget for the future, how to think about that, especially, and take the emotion out of the question. Can I afford this? Well, here's a system that shows what to do with the cash coming in order to account for everything and take a little bit of the emotion out of the question. And it's a very habitual thing. I'm a numbers person. A lot of people say I'm not a numbers person. I don't know about the budgeting. I'm a numbers person. I'm a profit and loss statement person, balance sheet person. I know these really well. Actually implementing it into my business was a game changer to say the least. It's a little bit of an eye opener, but it's very much it's as much psychological as anything else. You're creating good habits with your cash and working from day one to be profitable. So it's a great system. And even though again it's simple and it looks simple, transitioning to implementing it fully is a bit of a process. And so we help a lot of clients with implementing. We have 90-day project on helping to implement it. So that, because if you try to change everything overnight, something's going to go awry. So we're very specific in sort of, these are the steps we're accomplishing this month, and have a check-in call. These are what we're doing the next month. These are the next month. So, and I'm happy to continue conversations with anybody. You can email me. I actually, last time, Michelle was kind enough to give me the email list from everybody that was able to attend. And I just reached out to everybody and said, hey, it's great seeing you, but also if you want to be on our email list, which we send out like one every 2 months or so, something like that. If you'd like to be on our email list, sort of be in the know about some things, deadlines coming up, you have the option to opt into that. I wouldn't put you on that automatically, but I'm clearly a talker, so I'll talk all day about it.
Very good, Joy. If you're interested, as Joy said, in talking to her further, then please reach out to her. You will be receiving a copy of the slides and a video of the session. Just be patient. It's going to take me a little while to get to it right now. I have other things going on, but we will get those to you so you can review it. Joy gave us a lot of information, so it'll be in your best interest to review it slowly and go from there. But we will schedule Joy again in first quarter, so stay tuned and watch your emails as well as visit our website, uh, score.org/Nashville. Click on take a webinar, take a workshop, and all the workshops that we have scheduled will be there for you to be able to then sign up. Just for your information, tomorrow evening from 6:30 to 8, we have an excellent webinar, Am I Ready to Start a Business? And Lee Spiker, who just does a fabulous job, goes through really the nitty gritty of what you should know while you're thinking about starting a business. And then we have Understanding Business Taxes, Federal and Tennessee State on Tuesday, the 19th. So those are um, the closest ones before Thanksgiving. So, Joy, do you have any closing comments?
Well, good. Thank you, everybody. Seeing a few comments. So
Wonderful. So, thank you all for being here and have a great rest of your day.